Hi there. Welcome to another episode of Good Investing. I'm your host, Tim Nash. With all of the recent market turmoil, I decided to do a little bit of a market update just to talk about the recent tariff announcements from Trump and sort of the market response to that. I think we're going to be getting a lot of really nasty headlines over the next few days. So just want to remind you to take a long-term view when it comes to this. And let's jump into the market update. So welcome to our market update. Welcome to Good Investing. I'm your host, Tim Nash. What we're going to do is do a quick little market update. I'm recording this on the evening of April 2nd. So today was Liberation Day, as Donald Trump said. Lots of conversations about tariffs and kind of what's going on. So I figured it would be helpful to be able to have a little conversation just about what's happening in the markets. I know there are a lot of headlines, and I do need to prepare y'all. There are going to be a lot of headlines tomorrow morning. If you're watching this on YouTube or on the podcast, just know that you've probably already seen those things. So really what we want to do is start to unpack it a little bit to be able to understand kind of what's going on in the market. So I'm here on Yahoo Finance. This is just the news site that I tend to use. Really, I want to be, it was a funny day in the market today that even though we knew that Trump was giving his speech at 4 o'clock, that markets actually did rather well today. I can show you here, this is the S&P TSX Composite Index. So if we look at the Canadian stock market index, that today it actually went up by 1%. So, it was really funny, to see that the day sort of started down low, but that markets seemed to get confidence throughout the day and ended up quite well. But then Trump made his announcement at 4 p.m. after markets closed. And so with the US, we do get what are called after hours markets. We can see here that this is like the S&P 500 here, right? That at about 4 o'clock, I think people were really hoping that the tariffs weren't going to be so bad. And then the announcement was made, and the tariffs are pretty bad. They're not so bad against Canada and Mexico. No new tariffs were announced there. But really, tariffs were announced against a whole bunch of other countries, basically almost every other country, that they are doing what they're calling reciprocal tariffs. So they're just really kind of going after those other countries now. But this is my way of saying that, really it's US markets are down after hours by about 3%. The NASDAQ, which is mostly tech stocks, is down 4.20%, 4.2% right now. It's tough to know what's going to happen overnight, but I do expect we're going to have some very, very bad headlines in the morning about the US stock market cratering and things going down. I'm here to remind you that it's actually not that bad, that the headlines are really going to be pushing a very short-term view of things. That if we look at the last month, for example, the US stock market is down about 10%. Like this is, the NASDAQ down about 10%. But if we look at it over the last year, the stock market is actually up 3%. Right? And when we start to zoom out on these things, if I look at the S&P 500, this is like a standard measure, the 500 largest companies. If we look at it the last year, it's actually up 5% over the last 12 months. So I really want to remind people that, we take a long view, that we're not day traders, we're decade traders, right? That the US stock market has had an incredible run. If I look at the last 5 years, this is kind of from the COVID lows. It's pretty wild that the 5-year chart now doesn't have that sort of COVID crash that we did experience. That's when I started live streaming, was 5 whole years ago. But that we can see that the U.S. stock market, the S&P 500, is up 120% over the last 5 years. And so when we look at the dip, even over the last month, yes, it's down about 10% over the last month. Yes, it's going to be down about 3 to 5% tomorrow morning. But, we want to put that in context that it really is not as bad as it seems from a long-term view perspective. So I just want to remind people, you're going to see the headlines like the sky is falling, stock market is crashing. When I really want to remind you that headlines do tend to sensationalize things, that really, when we zoom out, we kind of take a breath, we look at it, it's not necessarily as bad as it seems. Even if we look at the Tesla, well, we can look at Tesla, and I can show you that, because this is where, again, a lot of the headlines are going to say, and we can see after hours, Tesla is down 6.4%. So it's going to be like Tesla down 6.4%. Tesla was actually up 5% over the course of the day. There was an announcement that Elon probably isn't going to stay, working with the government for too long. That I think he's getting tired of it. I think they might be getting tired of him. So Tesla actually had a great day. If we look at the last month, yes, Tesla is down. Or if I do year to date since January 1st, it's down about 30%. All these headlines, oh my goodness, Tesla down, by so much, by 30%. But again, if we zoom out, if we look at it over a year, over the past year, if we zoom out to a 12-month, the Tesla is actually still up 70% from 12 months ago. My goodness. Right? That it really peaked, that when Trump won, Tesla share price popped. It peaked right around, it looks like December 17th is when Tesla share prices peaked at the top. And then they've done very poorly since then. That it kind of, became very inflated. And then that, I don't want to say the bubble has popped, but it certainly has, deflated quite a bit. But again, when we zoom out on these things, I think it gives us a much better perspective. Elizabeth says only gamblers get upset, investors do not. I love that view, Elizabeth. Thank you. It really is this notion of stay calm and rebalance. We're going to see a lot of headlines. That said, I wouldn't worry about it too much. There is definitely the possibility now that the U.S. has introduced these tariffs, that other countries are going to reciprocate, right? That they will implement their own tariffs, raise their own tariffs against. If we start to get into this trade war, that's where, I think that I would be more worried than I am. But otherwise, pretty happy here to know that things I don't think are bad as it seems. How are we feeling with this market update? Are there any specific questions? Daniel asks, Tesla exclusion from the S&P 500? No, zero chance of that. The market cap for Tesla is still very, very high. I don't know if it'll tell me. Here's the market cap, 909 billion. This is still going to be one of the top 10 companies on the U.S. stock market, even if with it being down so much. So, it might fall down the list, but no way that it'll get excluded from something like the S&P 500. But really, I just want to remind you that we do get these big red headlines and numbers, and, but all we do as investors, we take a deep breath, we zoom out, we remember how good it's been over the last little while to be able to understand that hey, this is when really we are long-term investors. We asks, if markets have a bad day tomorrow, would it be a bad time to do major rebalancing? It really depends. I think that there's no harm in waiting a week. I had a client this morning, she had a big inheritance come through. And that what we're looking at is doing a big sort of lump sum. Anytime there's this sort of tumultuous thing, I'd say, hey, maybe wait a week. That said, it might be a good time, to your point. It may be a good time, because things are down. I love buying when things are red from the day before. So to me, especially if we're buying, tomorrow might not be a terrible day. But that said, this is a major sort of event. So whenever it comes to these major events, never any harm in waiting a week.